Everybody, this is Jim at SP500chart.com. It is Sunday evening, about 10 o'clock. Got in a little bit earlier than I thought I would, so we're doing the video now. If you will, to save a little bit of time, pause the video at this point and please read this disclaimer. I don't have anybody new this weekend, so you've heard it before, but I just want to point out that this is important. So pause the video. Remind yourself of these details. Thanks for having done that. The week in general. Opened the week strongly, moved over our red line of resistance, but not by a technically significant margin. In fact, by less of a margin than the previous move over that line in late April, which was also not a technically significant margin. We spent the next, after that initial move on Monday morning, Monday was an up day, but Tuesday and Wednesday were significantly down. We came down and actually got slightly underneath a line that I had on the chart as a potential head and shoulders top here, and we got underneath that line on Wednesday, recovered right up to about that line by the end of the day. You can see right here, and then I made mention on Wednesday's video that this line right here could be an indication that this was just a little temporary dip, and that rather than breaking down through this, we just were coming down to tag our lower red or come very close to tagging our lower red support line. So, Thursday morning, we rallied. We got over this line. We got over this line of potential resistance. And then we've pulled back just a little bit. But remember, just like what we saw on May 1st, where we rallied up and then we went sideways with a slight downward bias. Then we rallied back up, then we fell back with a slight downward bias, then we moved up again. It is always better, I think, to rally and then have a slight downward bias than it is to rally then have a slight upward bias, because that slight downward bias often ends up being a bull flag, which was essentially what we ended up with for the second half of Thursday. A bull flag that broke out big on Friday morning. We got over our red resistance line again, but we put on the brakes once again over this red line. So that has led me to put this line on the chart, a brand new line. This goes back to the high of April 27th, the high of May 4th, and you can see that is where we put the brakes on Friday. So this line, we've seen it before. We got above it, came right below it. Got above it again, came right back below it. Got over it again. You know, I'm not going to say that necessarily the third time is a charm. What I'm going to say is, until we get 1% over this line, I don't think we can count on it to have turned from resistance into support. So, I'm not at this point going to say that this line should give us support. But I will say, I think this line has shown that it wants to give us a little bit of resistance. Let's zoom in just a bit. Here you can see, here's our sort of a descending channel right here, however you want to draw this. It's not perfect on the support side, but it's pretty good on the resistance side. That was roughly a 3-day skid if you consider that it started at the beginning of the day on the 4th, and that broke out, nice move up. And you can see, though, twice on Friday, the S&P came up to this line and twice failed to get over it. Where do we need to get up over this red line for it to be technically significant? Well, that line is at about 21, let's call it 2107 at this point. Let's say we need about 21 points over that. So 2107 plus 21 is about 2128. Interestingly enough, there's 2128 right there. And why is that there? The reason, and it's probably not as good a reason now as it seemed at the time, but we had this double dip right here that once we got over that, we put 2128 on the map, so to speak. So if we are able to reach that level right there, that will fulfill that little double bottom from quite a bit earlier in the year. That also, as I mentioned, is the point at which we would be technically significantly above this red line right here. Now what about this line that is currently at about 2115? Well, we would need about 21 points to get above that, and that would be about 2136. But look, here's the deal. I still think our red lines are important, and I think if just kind of not get too sidetracked by this line right here, I think if we get significantly above this red line, then we have every reason in the world to call for a minimum target just under 2200 in the S&P. And I'm hoping that happens. As I've mentioned over the past number of weeks, if we look at what we've been seeing in the S&P since the beginning of the year, right here, essentially we are just in the upper half of what has been, actually since December, pretty much sideways action. If you look at where we were on December 8th, we were at 2079 on December 8th. Where are we now? We're at 2115. We're 35 points higher. 1.75%. Not much. That's nothing. So, this, I think, is the pattern that is currently going to be driving things at this point in time. And let's just see if we get technically significantly over this red line. And that's defined as a move over this of at least 1%. If we can do that, then I think we call this pattern a breakout, and we start to look for something in the upper 2190s. I don't think it's quite 2200, but it's in the upper 2190s. So guys, I think that's it. It was a nice day Friday. You can see now also, since this pattern has been constricting more and more, we're to the point now to where just a day or two and we're either at the bottom line or we're back up at the top line, or vice versa. So I would love to see some follow through buying on Monday, and hopefully get us up and starting that new leg up, because we've been going sideways now for almost 6 months. Again, like I said, a slight upwards bias, but not much. The S&P has not been a very good investment for the past 6 months. So let's see if that changes as we move into May. Remember, they say sell in May and go away. And while there have been a few times in the past 6 years where that would have been, at least for the short term, a good thing to have done, nobody can say at this point that that anyone who sold in May picked a top, because each May we're at a new high, or we're at a new level that is higher than the previous May. So I'm just looking at this right now. As I've said a number of times, the red lines, I think, define where our next move is going to be. So guys, thanks for watching. Thanks for putting up with my failing voice. I'm trying some different things for that to get better, and if it doesn't work, then I go to an ENT, and I guess they'll have to look down there and see what's going on. So anyway, thanks again for your support. Thanks for your time, and take care.